Good morning and welcome to this fingraphs.com podcast on Dukascopy TV. Today we're going to review our cross-asset mix over the next few weeks. To do so, we're going to use a mosaic on our fingraphs.com platform. We're going to use the mini S&P future, Euro-US dollar, Treasury notes and gold, both on a weekly basis for the perspective over the next few quarters and on a daily basis for the perspective over the next few months. What we can say at the moment is that we believe that the mini S&P future and Euro-US dollar are still in uptrends at the moment and could probably continue to be in uptrends for another month or so. Treasury notes and gold, on the other hand, have been correcting for at least 6 months, and we do believe that they should find support over the next month or so and probably initiate a recovery rally into the spring. Now, looking at them into detail, first the S&P 500, it is still moving up on our weekly graph. It's getting quite overbought here on our risk index, yet we do believe that the move is not quite finished yet and could extend a few weeks higher. This is what we eventually see here on the daily graph, where we are getting towards the overbought zone, but the move doesn't seem quite finished, and we do believe that it can make it up to the 4,000 mark into March. The hourly graph is still heading up here. It's seen a slight intermediate correction, but the uptrend is still in place, probably for another couple of weeks at least, and our targets are showing this 4,000 target. So our view on the mini S&P future is that we're probably still in the uptrend into March, and that from perhaps mid-late March we could enter a retracement period into the spring. Now, looking at the Euro-US dollar, it had 2 years of a downtrend here, a downtrend which followed most cyclical assets between early 2018 and March this year. It has since rebounded very dynamically and is getting close to the highs that were made in 2018. The daily graph is still uptrending. It saw consolidation during January, but seems to be resuming higher. We believe there's another leg up here, along with risk assets. Euro is still slightly positively correlated to risk assets, and possibly into the month of March, perhaps mid-late March. Upside targets we would probably see around the highs that were made in early 2018, which will provide a lot of resistance, and those levels are between 124 and 125. In the meantime, we've had an initial bounce here. We've stalled on a resistance here, on the resistance of our corrective targets to the upside. We expect a bit of work over the next few days, but possibly towards perhaps the end of next week, a breakout and the confirmation of a resume of trend situation into March. Looking at treasuries, we still believe this is an uptrend. If we look at the long-term graph, it was highly overbought here since the consolidation. It might not make new highs. I think expecting that we may retest down to the lows on yields is now a bit aggressive, but we do expect some kind of a retest up on the treasury notes here, so a retest down on yields. Looking at the daily graph, we're still in a downtrend at the moment. We're getting close to the oversold zone, but it's probably a bit more time to go. And we believe that treasury notes will probably stay under pressure until March, which means yields will move slightly higher until then. Our targets on the 10-year US a yield above the resistance of 120, perhaps towards 125, 130. On the hourly graph, we've had a slight attempt to rebound here, but we do believe that we should resume lower, probably from early next week and then into March. The second quarter, we believe, could then see a more worthwhile bounce on the treasury notes, which would confirm the fact that we expect some retracement on the US 10-year yield. Perhaps back below 1, perhaps back to 0.8%. Finally, looking at gold, still in an uptrend also, not quite yet overbought here. Our impulsive targets have been reached, but we are calculating our impulsive to extended targets, which could lead us up to 2,200, 2,400 over the next few quarters. So we're still bullish there despite the consolidation, which has been lingering on for quite some time. The risk index has come down almost to the oversold zone. There's probably a bit more risk here over the next week or so. So we'd probably not act today, but wait and see a bit more confirmations. But we do believe that by the end of February, perhaps as the euro starts moving higher again, we should see gold find support and start also moving higher. We then expected to rise into early Q2, possibly making new highs and possibly extending perhaps towards mid Q2 as a more defensive profile. In the meantime, as we just said, we're still in the downtrend. We're probably retesting down, and there's probably another week or so of risk here. So wait patiently, and then probably a good opportunity to buy the dips. That's all for today, and we wish you a very good week of trading. Thank you very much.